Well, multiplex operators are in focus. The Karnataka government has issued a draft notification to cap the movie ticket prices at around 200 rupees per show across the state. The proposed rule would apply to all theatres, including multiplexes, and cover all language films. The cap is inclusive of entertainment tax. To discuss this and more, we are joined by Karan, the EVP at Elara Capital. Hi, Karan. Good morning. Thanks a lot for joining in, Karan. Well, the stock in focus today is going to be PVR. So if you could tell us what kind of exposure do they have in terms of number of screens, how much of their revenue profitability comes in from Karnataka?
Hi, Nigel. Good morning. I think PVR Inox has got a reasonable amount of exposure in Karnataka as a state, largely because of Bangalore being a metro city. If you look at the screen share, around 12 to 13% of the screens are in the state of Karnataka. And if you look at the overall box office market in terms of revenues, if you put regional and Hindi languages put together, it is anywhere in the range of 10 to 12% of box office revenue coming from there. So I think this news will definitely have a negative impact on the overall ATP for PVR Inox. 30% is the downward revision. The average ticket price for PVR Inox today is about 260 rupees. If we go by this ATP cap of 200 right now, there's a 30% downward revision on 12 to 13% of your revenue exposure, which means there's a 3 to 4% kind of a revenue negative impact. And in terms of EBITDA, you could see a downgrade of anywhere in the range of 2 to 3%.
This has happened in the past, right? In April of 2017, also, the Karnataka government had introduced this movie cap. What happened then, and what parallels can be drawn from that episode?
So I think even right now as we speak, the order has been passed, but they've given a 15-day window here, for getting public opinions and try to basically see whether or not they should be implemented. So there is some kind of grace period. I think the exhibitors will try to lobby hard for this move not to happen. Now, in the past, when it happened, they had gone to the court and appealed. And that time around, this order was rolled back. This was, I think, in 2017. If you look at South as a market now, I think most of the states in South have got a ticket price. If you look at AP, Telangana, they have a ticket price more towards 200 rupees. If you look at Tamil Nadu, they had 160 rupees ticket price since many years. So most of the regional markets do have a ticket price cap, which is already there. The bad part for the multiplexes is that the timing, right? So had this come about 6 to 7 years back when occupancy levels were great for multiplexes, some bit of negative impact of ticket prices could have been offset by higher occupancy. But as we're seeing right now, the industry is really struggling for occupancy. There's a structural dent right now. Occupancy levels fail to revive towards more than 60-70% of pre-COVID levels on a steady state. And secondly, also you have to put in the fact that exhibitors are expanding aggressively in the South market. So more than 50-60% of the new screens are coming in the South market, which means that there are more concerns for them. So I think we'll monitor these two things from here on. And if at all this order is passed, it's going to be a huge negative for the exhibitors.
All right, Karan, personally, I'm hoping that a film that releases in Karnataka over the weekend does well. Due disclosures on my part as well. This weekend itself, Junior is the film that I'm looking out for, which is releasing in the Kannada market. That said, is there a risk of contagion? Other states as well looking at this price cap, which as you said, occupancy has been low. And then, in fact, you have a price cap. That's a further dent, right? Do you see that risk playing out, or do you think it will be restricted to the south part of India?
So predominantly over years, we have not seen these kind of caps in the northern and the western, the eastern markets. It's predominantly there in the south market as well. So we don't foresee any risk as such of this coming into other states as of now. Why it is there in South is because obviously South, there's a huge fan following. There is a star power. People really want to go and people actually, the government actually wants to make cinema an affordable medium in terms of consumers. And typically, because of the ticket price cap, the occupancy levels are almost 1.5, 2 times in the South market as compared to the Northern and the West market put together. So we don't see an extension of this coming into the Northern and the Western belt as of now. But yes, even in South market, as I said, because the expansion initiatives are so aggressive right now, because you'll see more screen additions in the South market, this will definitely have a negative impact right now and going ahead as well.
So 2 questions, Karan. One, from an PVR point of view, PVR Inox. Now they are planning to expand aggressively in South India, including Karnataka. Will this derail their expansion plan, even if it's a franchisee-led model? And 2, your own target price is 1,100 rupees per share, I think, on PVR Inox. Now you're talking about a revenue EBITDA impact of 2 to 3%. So if it gets implemented, going with that assumption, how would your target price change? And what is the advice now to shareholders?
I think firstly, if it all gets implemented, there's not going to be a big change in terms of target price. The only thing is the valuation de-rating that we'll see for the company. If you look at the EV EBITDA pre-India's valuations, the revenue has been below par since almost 1 year and a half, right? That's primarily because of content not being consistent, primarily because of occupancy levels not being up to the mark and profitability concerns as well. So we see valuation multiples may not be able to move up beyond a point because the structural dent, it is not like a 1 year thing which will have a negative impact. Things will kind of, come back. Things could have come back. As I said, had this been 5 years ago, occupancy levels could have kind of offset negative impact of the ticket prices. That could have been a scenario. Second thing on the expansion plans, definitely I think they'll relook the expansion initiatives given what has happened in Karnataka, because as I said, because of Bangalore being one of the top metro cities in the country today, they will have to relook at the expansion plans in Karnataka going ahead.
Yeah. The angst mostly on social media, etc., is not about ticket prices, it's about popcorn prices, usually. But yeah, I mean, we'll see if this does go through or not. And it could be, I mean, if it does go through, then it's a kind of a signaling effect in for other states, etc., as well, right, Karan? Possibly. We don't know.
Very low likelihood, because predominantly since many years, 10, 15, 20 years, we haven't seen the northern west market states behave this way. These kind of ticket price caps have only been implemented in south. So it does not have a spillover impact, but because, as I said, regional content has come up in the post-COVID era. Regional content contribution in the pre-COVID times was below 30% for the exhibitors. Today is more than 40-45%, and even more than 50% when you see a large film like Pushpa coming in. So I think, this will definitely have a negative impact in terms of their box office revenue growth, in terms of the valuation multiples.
Got that. Thank you very much, Karan, for running us through, how to think about this one. So valuation de-rating if it goes through. But we'll, of course, an important point, this is sort of this kind of stuff only from southern states, but we've not seen those from northern western states, which are the other bigger and crucial markets for these companies.